Welcome to Common Sense Investing. My name is Cameron and I am a penny stock investor. Typically that involves covering stocks that are worth less than about $5 per share, about $500 million market cap. In 2024, I introduced 56 of these stocks to you investors at an average return of about 58%. At the start of 2024, I produced a Best Canadian Stocks video, which gave you an introduction to a whole bunch of different stocks, 4 microcap stocks, and then 4 tinier high-risk nanocap stocks. This year I decided to split it up. If you haven't seen it already after this video, go check out my 5 best microcap stocks for 2025. And in the future, maybe more top 5 videos to come. Before we get started, do not forget that I'm not a financial advisor and I'm definitely not your financial advisor. I don't know your financial education, experience, your risk tolerance, or anything else about you. These videos are not a solicitation for you to go buy a stock. They're here to create good discussion and introduce you to a stock that might be worth your time to go research and form your own opinion. And if you want to continue discussing and researching some of these great stocks that I introduce over the year, down below in the pinned comment, I will put a link to my paid Patreon Discord. Now let's get right to it. My number 5 nanocap stock of the year, Cematrix Corporation. And look, there are a lot of things I don't like about Cematrix right now. Earlier in the year, the CEO said the backlog was growing and to expect about 30% growth in 2024. I introduced Cematrix on my channel earlier in the year at a price of around 33 cents Canadian. Share price went up and then it crashed down. What happened? After share price going up nearly 50% from my introduction and everybody celebrating, basically near the top, Cematrix decides for no reason that they need more cash, introducing 2 bought deal private placements, diluting shareholders. Then it makes sense because in September they announced that there are project delays and that 30% revenue growth is not going to happen this year. So that's pretty ugly. What gives, Cameron? Why is Cematrix still making my 5 best nanocaps video? Well, basically, I wonder how much of this was pre-planned. The company did a lot of share dilution for cash. They announced the retirement of board members and then project delays. All this bad news. Then at the start of December, longtime CEO Jeff Kendrick retires, announcing a new CEO in Randy Boomhour. In the meantime, Jeff, before he leaves both as CEO and leaving the board, says that they're expanding into regions of North America less impacted by winter weather, so possibly expect some acquisitions, as well as they do have an increasing backlog, $74 million in potential growth in the future. So while things are looking bad for Cematrix, they're still producing cash. In fact, going into 2025, they have $10 million cash plus the recent financings, almost no debt. And despite 2024 being less than perfect, they do have a good product in their cellular concrete solutions that were trending up prior to this year. So while it's hard to do, I'm trying to ignore a little bit of what happened here in 2024. I'm looking ahead to the future with Cematrix, new CEO, good valuation, great balance sheet, lots of cash, potential acquisitions, a lot to look forward to. Moving on to my number 4 pick. Snipp Interactive. I introduced this company, the penny stock powering major brand marketing, back in September of 2024 at a price of around 7 cents Canadian. This is a company that's not marketing Walmart and Costco and other retail stores. They're actually marketing the brands within those stores, trying to create brand loyalty, given the competitive nature of retail sales. Not only what store you're going to shop at, but what you're going to buy once you're in that store. Snipp allows a brand to determine who their customers are, and apparently at the end of the day, how do we keep them coming back? The investing thesis for Snipp is a tale of 2 stories because, as you could see, declining revenue, which is not anything you typically ever want to invest in. But this was planned as Snipp got rid of one of their large legacy low-margin clients that was holding this company back. And what that has allowed is recently, in their most recent quarter, net income positive from losing significant amounts of money in the previous quarters. So has this company reached an inflection point where, yes, top-line revenue took a big hit recently, but it's starting to recover and they're doing so with a better bottom line profit? Again, if you know my channel, combined with a good balance sheet, plenty of cash, no debt, where can this company go in the future? So while I'd like to be recording this video back at 6 cents for you, they're still my number 4 pick. On to my number 3 pick, Sabio Holdings, introduced to my channel back in May of 2024 at around 28 cents. It doubled during the year, and since that time, share prices dropped back down. Go research the company. I'm very bullish on this industry. Essentially, Sabio Holdings is an ad tech solution company for the future of streaming TV. So free television apps on your TV, on smart TVs that everybody has nowadays. They're responsible for marketing advertisements on those apps. Why Sabio was such an interesting trade and did so well this year was this company obviously gets a lot of money from political revenue. Politicians during election years spending money on streaming television to hopefully get your vote. Now you can see this has had such an effect on the company, they've actually split out their compounded annual revenue growth into years where there are elections and years when there are no elections. Obviously this year, major US presidential election, it's been a good year for Sabio. However, what I think people forget is their core business, their company without the political spending, without the political revenue and profits, is still improving significantly. Even without political revenue, this is still a high-growing, profitable business. They have a lot of recurring revenue, and while I don't agree that they have a moat, they do seem to have a strong competitive advantage. Third quarter earnings saw an 82% increase in top-line revenue and a 37x to their adjusted EBITDA profitability. The most recent quarter shows a significant inflection point in both top and bottom line, and if they can just sustain these numbers, it would be a significant improvement over this past year. So while everybody seems to have been swing trading Sabio Holdings on the political spend in 2024, I believe that there's a chance their 2025 is going to surprise people. So at number 3 on my list is Sabio Holdings, 45.5 cents Canadian. As I record this video today, December 19th, all these prices were taken from today. Moving on to my number 2 pick, Evome Medical Technologies, down 47% year to date, $9 million market cap, so really tiny company. A lot of risk with Evome as this is a turnaround story. They're trying to make changes in this company, reducing their revenue from 46 million to 32 million in the first 9 months of this year, significant interest expenses on their debt, and as you could see, a $1.1 million net loss on the quarter. Current ratio isn't very pretty. Again, with low cash reserves, 1.4 million, they have accounts payable, they have debt, they have leases to pay for, a lot of risk on the balance sheet. So yes, high risk, but what's the reward? I wouldn't put it on this video if I didn't think there was a potentially good reward for Evome Medical Technologies shareholders, if you're willing to take this risk. They're trying to sell off their non-core asset to pay off their debt and improve their balance sheet. In the meantime, moving forward with their profitable and growing product, Biodex. The company is saying the targeted sale price of their non-core assets $15.1 million, while the debt of the entire company is $14.8 million. So what you're betting on in 2025 is that they can get this done, they can get rid of their debt, maybe give themselves a little bit of cash, move forward with Biodex, which produced $6.1 million of revenue and is apparently profitable so far in the quarter. And can that improve their market cap? So high risk, high reward, inflection point turnaround story in Evome Medical Technologies. What's my number 1 pick for 2025? Omni-Lite Industries Canada with this cool fighter jet on their website, up 116% year to date. Is there more potential growth in the future? Good company with a long history of providing aerospace and defense components and technology. They have a history of growth, 25% compounded annual growth rate, and potential in the future for a significant upside in aircraft build rates and the adoption of new components addressing size, weight, and power of aircraft. Stable, large, diversified client base. This is really impressive for a small Nanocap stock. But after running the share price up to about $1.75 Canadian, it's down to $1.30 as of the recording of this video. Why is that? On the recent quarter, they had an outage of certain automated casting equipment. This outage has been fixed. What it caused in the most recent quarter is an increase of only 14% on the top line revenue growth, and their adjusted EBITDA decline. So yes, they are a manufacturer. They had a breakdown. They had a lumpy down quarter because of it. Despite having a bad quarterly earnings, the company still almost doubled their free cash flow and their backlog is still increasing. Like many of the great stocks that I've introduced on this channel, great balance sheet. Omni-Lite has about $3 million of cash. They also have owned about 7 million shares of another company, California Nanotechnologies. California Nanotechnologies has paid off their debt to Omni-Lite, giving them more cash, and Omni-Lite has been selling some of their Cal Nano shares to get even more cash. So with Omni-Lite's $20 million market cap today, you get top line revenue growth, you get a profitable and growing adjusted EBITDA, and you get free cash flow, and you get more cash from California Nanotechnologies. And what I love to see, completely unrecognized, completely undiscovered, because despite, yes, share price has gone up over 100% in 2024, valuation has actually been improving, getting lower. So the more this company succeeds, the more share price has been going up. It's still been getting arguably cheaper. The company says to expect double their revenue every 3 to 4 years. I expect this would have a significantly positive impact on their adjusted EBITDA, on their free cash flow, and with the cash they have on hand and with a complete lack of debt, can they achieve this type of revenue growth? I'm taking the bet that they can. Omni-Lite Industries Canada at a price of $1.30 today is my #1 Nanocap stock for 2025. If you're looking for a gift for someone who has everything in your life, or just looking at Christmas time to donate to a great grassroots charity, I'm supporting the West Coast Kids Cancer Foundation. In the month of December, there's a generous anonymous donor that is going to double the impact and donate whatever you donate. So double the money. I will put a link down below in the pinned comment to West Coast Kids Cancer Foundation. As always, my name is Cameron. You've been watching Common Sense Investing. Good luck in 2025. Hopefully I'll introduce another 56 new stocks to you. See you soon.